Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go over some live rates and then do a deep dive into a topic. Before we do that, though, we will wait to give everybody a chance to jump on and let us go live on all the different platforms. We are streaming this live on YouTube, Facebook, and LinkedIn. So give us a moment here to get live on all the different platforms. We do have the chat pulled up on the screen, so as you tune in, feel free to drop a comment there in the chat. We'll get started here momentarily. Thank you, everyone, already dropping comments there in the chat. Owen, Jason, we appreciate the comments. Dario, appreciate the comment. All right. Keep dropping your comments there. Also, as we go through our deep dive topic, feel free to drop any questions that you have. We'd be happy to answer any questions you have about our deep dive topic here today. Thank you, Adrian, for the comment. Appreciate everybody tuning in and commenting. It looks like we are live on all the different platforms. So we can go ahead and get started. Keep dropping comments there in the chat as we go, and also any questions you may have. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every day is go through some live mortgage rates for different programs. And then we do a deep dive into a different topic every day. Now, today's topic is something we're very familiar with because we do specialize in non-QM loans, which is foreign national loans. So here shortly, our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into that topic. And he is actually located here in South Florida. So not only do we specialize in non-QM loans, but he's had plenty of experience with foreign national loans, seeing that we are based in South Florida here. Now, before we do that, we will do what we do every morning, which is go ahead and pull up our pricing tool and check out the rates for some different programs. So Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates for today, August 29th, along with the APR, including all the fees. If you'd like a full breakdown, a full loan estimate with all of the fees that are itemized, please get with our team members. We have over 300 licensed loan officers in 24 states for primary homes. And we can do our investor loans, which is typically the topic for foreign nationals today, in 44 different states. So almost the whole U.S. there for our foreign national investors. But for today's demo, we will set up a basic scenario and compare our standard programs. So we'll set a loan amount of $400,000. We will set the LTV to 80% loan to value, 20% down payment, pretty common scenario. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. We will compare our programs. We'll start with conforming conventional as we do every day. Then the next best option is usually FHA. And then we'll check out our expanded guidelines where we have over 5,000 unique loan programs using alternative income. We also offer VA and USDA. VA is only for our eligible vets and active service members. If you are eligible, let us know. We can quote it, no problem. And same with USDA, we can quote that no problem, but only for properties that are in a USDA eligible area. So if you do happen to be shopping for one of those, just let us know. We'll start with conforming conventional. We'll do purchase, 30-year fixed, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every day, let's check out the rates. Still about the same as yesterday. It's just a touch cheaper. 7.375 rate for 0.75 discount points and costs. Final APR 7.533. I believe yesterday we were at the 0.875 cost here, so 7.538. Very similar cost here as yesterday, but hopefully, again, we see some downward momentum. It looks like the markets have eased up a tad. Now, if our customer doesn't qualify for conventional there, usually the next best option is FHA. So we'll put the same scenario in, and this time we'll select FHA. FHA does allow a little more leniency on credit issues, as well as a higher debt to income ratio. But to compare the programs, we will keep everything else exactly the same to compare apples to apples here. And FHA did move down a little bit yesterday here. 6.5 rate, 0.875 discount points and cost. Final APR 7.088. I believe yesterday we were a little bit higher there. So the downward momentum has started in FHA there. Definitely a great deal for our customers that qualify for both today. You might want to take advantage of FHA. It's a little bit cheaper in this example. And our customers that need to use FHA for the little bit of leniency definitely can take advantage of the changes there. This APR does include the upfront mortgage insurance and yearly mortgage insurance. So definitely some good action there on FHA from yesterday to today. I believe it's about a quarter point. Now, if our customer doesn't qualify for FHA or conventional, many other banks or lenders don't have any other options and have to deny that customer. Fortunately, here at the Mortgage Calculator, that's where we specialize, where we can help basically anybody here under expanded guidelines, also known as non-QM, where we have over 5,000 additional programs where we can change the income options. So everything else will stay exactly the same. However, when we select non-QM, we have a new option pop up where we can change the income. Let me scroll down here. So full docs, what we use for FHA and conventional, that's 2 years of tax returns. So typically we'll select a non-QM option in order to solve our borrower's problem by using alternatives such as asset related, business bank statements. Our investor programs are only for investment properties. We'll talk about that shortly. Personal bank statement 12-month, definitely the most popular program for a primary home. We have RSU, stated, VOE, 1099, P&L, and no income CDFI loans as well. The most popular program is the 12-month personal bank statement, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs and may not quite qualify at all, or may just not quite get as much income as they really want to get the home they really desire. So in this case, we'll solve our borrower's problem by using alternative income. No tax returns involved at all. Simply use their last 12 bank statements in this case to determine a debt to income ratio of 40% in this example, using just the cash in their bank statements. No tax returns at all. Most self-employed borrowers qualify for double or triple the income using this method and can therefore get that home they really want. So these non-QM programs do have slightly higher costs. However, these are amazing solutions when our borrower needs to use them. And today, as they have been very recently, they're almost identical rates to conventional, as you can see here. Best option, 7.5 rate, a little bit more cost here, 2.5 discount points and costs, puts our final APR at 7.617. So remember, conventional was right at 7.5. Here we have a non-QM bank statement option, completely different qualification method. For just 0.1 higher approximately. So again, non-QM definitely coming in strong recently as the conventional rates have been going up. And you'll see we have dozens, if not hundreds of options here using bank statements. Some of these have a little bit higher rates and costs, may allow things like bankruptcies and foreclosures and other types of credit events that would otherwise cause our customer to not qualify. They also may use different ways to calculate the income. Now, before we get into Jose's example, we always switch it up with some investment property live rates. So we love to work with investors, first-time investors, as well as seasoned investors. So we'll set up the same scenario here, 80 LTV, everything else identical. And we'll compare our options for investment properties, starting with conforming conventional. And then we'll check out our non-QM expanded guideline options. Remember, government programs, FHA, VA, USDA, do not work for investments. So we'll start with conforming conventional. Everything's the same as our other demo. All we've edited here is the occupancy. So we can see the adjustments that conventional has added for investments. And unfortunately, as has been the case the last few days, it's not very good news. So, with these high adjustments that have been added, this is really not a feasible loan. So, 7.625 rate, but 4.625 discount points and costs. Would not be able to offer this to our borrowers even if we wanted to. But for example purposes, puts our APR at 7.912, which is the best APR example. Does look like there is an opportunity here. Someone has updated their options here, Jose. So there is a legitimate option now. The second one, even though it's a little bit higher APR, actually would be able to be offered. So this is the only realistic option here, 7.875 rate for 2.625 discount points and costs. That puts our final APR at the 8.096. So I would use this as an example. We could offer this to our customer that wants to use conventional, but I definitely recommend our customers that are looking for investment properties check out the non-QM options in this case. So for our final demo to solve the high costs there, we'll set up the same scenario, ADLTV, investment property, and this time we'll select expanded guidelines, also known as non-QM. And the first thing we need to select is our income option. Most popular option for an investment property is going to be our investor DSCR option. That's because it doesn't require any income or employment from the borrower. Simply use the estimated rental income to determine a DSCR. It stands for debt service coverage ratio. So if the estimated rents can cover the PITIA of our mortgage, the expenses of the mortgage here, that is a ratio of 1.00 higher, aka the property cash flows. We also have options for ratios under 1.00 where the property doesn't quite cash flow. For the demo, we always put 1.5 so we can see all the options pop up. And the final thing we must select is a prepayment penalty. 3 years is standard on these programs. There are options for no prepay that will cost more, and there are options for a 5-year prepay to save some money, but not all loan programs allow it. So 3 years is the most common, so we can check out all the best options. So let's see the DSCR rates this morning. Woo, smoking. So we're really beating conventional here by quite a bit now. So 7.75 rate for 0.975 discount points in cost, and a final APR of 7.816. So the only reasonable conventional option, remember, had the APR over 8. We're coming in here with a DSCR a quarter point less. So this is amazing. The last we've been doing this for 6 months or so. Doing these live rate examples. This is a first, guys. These last couple weeks, when conventional has been going crazy, non-QM is coming in strong. This is a great opportunity for our investors to snag some DSCR options for cheaper than conventional. Doesn't happen often. Now we will go into Jose's example where we have some of these DSCR options, maybe at these little higher rates and costs. If you scroll down here, tons of different options. May allow things like bankruptcies and foreclosures, may allow things like short-term rental income, very common request. And some of these programs may allow foreign national investors. So obviously I don't do that on the live rates, but let me switch my screen and we'll have Jose go into some examples for our DSCR loans and other loans for foreign nationals. So you guys see on the live pricer, we always have an option for citizenship. I never really changed that on the live demo, but obviously Jose is going to go through some examples where if we do change that citizenship, what loan programs we have to offer a true foreign national. Of course, before we go into that, Jose, let's define a foreign national. A lot of people are confused. Can you please explain the difference between the statuses and what we're talking about today and what we're not talking about today?
Awesome. Something I hadn't noticed in the photo there, that's a Cuban flag right there. Pretty cool. Foreign national gets confused by a lot of people with ITIN and non-permanent resident aliens, right? So I just want to clear what a foreign national is and what it's not. Non-permanent resident alien is a borrower that's legally working in the United States with a work permit, deriving their income from 100% from the United States, right, while living here full time. They don't have a citizenship status nor permanent resident alien status, but they do have a legal status to be working here in the United States, and they are eligible for all of the same programs that a full-time resident or citizen is, as long as they have the credit and income verification for the type of loan that you're doing. An I-10 borrower has an I-10, which is their tax document to be able to file tax returns. It's not a social security number, um, but it does allow you to pull credit. The I-10 borrower also does not have legal status in the United States, but they are working here full time, and they are deriving their income here and living here. The foreign national also does not have legal status like the I-10, but their income, if you are using income to qualify the borrower, their income has to be derived from outside the United States. We do have foreign national borrowers that do have businesses here. They do have LLCs, but unless they have the visa type that allows them to legally work here, and unless they have U.S. credit, they would not be considered a U.S. national borrower. They would be a foreign national borrower. Foreign national programs, most of the times, do not require any U.S. based credit. If the borrower does happen to have U.S. based credit, then you will have to qualify them based on the minimum credit score and credit matrix requirements for the program that they're applying for. So remember, no U.S. credit is required most of the times. Now there are a couple of options out there that actually do require U.S. credit for foreign nationals. So make sure that when you're selecting the options for your borrower, that you don't inadvertently select one if your borrower does not have any US based credit. So I have for today purchase options as well as some refi options. We do have full doc and we do have DSCR. Now, the foreign national would never be considered a primary occupant. They would be either second home or investment, right? Now, usually the full doc option would be an option preferred, if the property does not cash flow enough to qualify, or if the borrower intends to occasionally occupy the property, because as you know, on a DSCR loan, they are not allowed to personally occupy the property, nor is any of their excuse me, family and friends allowed to occupy the property. So if you do have a borrower that says, hey, I want to occupy it every now and then, and when it's not occupied, you can rent it out, like perfect for a short-term rental, then you would probably need to go the full doc option so that you don't violate the terms of the loan. So our first example is at a 75% LTV, which is the maximum loan to value that you can have for a foreign national loan. They were 80, but we had some adjustments during the pandemic, and that's where they stayed at 75%. Now, this option here does require a credit reference letter and a bank reference letter, and it does require a valid visa. However, no U.S. credit is required. Now, regarding the visa, that is only if they are from a country that is not a visa waiver country. We have a lot of countries that have agreements with the United States that their citizens do not require a visa to enter the U.S. For example, uh, borrowers from Europe and borrowers from Canada are two categories of borrowers that are not required to have a visa on their passport. So here are full duck options, 25% down, very good options. You're looking at 9.375 with a little bit of a lender credit, and you can buy that down all the way to 8.25. So same loan, but was 30% down, just so you could see it's a little bit lower on the rate here. This one was 9.375. This one is 9.25. and you can buy it down to 8.125. So a little bit of a betterment there, going the extra 5% down. Okay, now I have another option. We do have an option that does not require credit nor bank reference letters, right? So this option here, you're looking at 9.625 as your lowest
So a
cost
little
option.
more cost
Yeah,
to go the streamlined route, basically.
correct. But sometimes documents take a while to obtain, especially if the borrower may already be here shopping. So if we give them the streamline option that does not require any of those, nor does it require a visa either if they're not signing in the U.S. If they're signing in their country or outside of the U.S., this program doesn't even require them to have a visa. So again, pretty good options there. 9.625 lowest cost option and 8.5 lowest rate option. And this is the same uh, option, and the rate didn't print. Okay, we'll go to the next one. So this one is no credit nor bank reference. Now this is DSCR, right? So debt service coverage ratio, loan, and here you're looking at 9.75, and that's at 1.75 points. I just selected one option there, but you can buy. We had par options, and we can usually buy these all the way down to 3 points cost on those. So 9.75, 1 3/4 points. And the same option was 30% down. The rate drops to 9.125. So you do have an appreciable difference with the DSCR option when you are taking it down to a 70%, because 70% is really the more common loan to value for foreign national loans. 75% is already taking it to the limit. So our 1 unit with credit reference on the DSCR, we do get 10% with a $94 lender credit, 8.875 as our lowest rate option. And our 1 unit 30% credit reference, a little bit of a betterment there, 9.625 with a lender credit, 8.5 lowest cost option. And now we have some cash outs. 70% is the maximum loan to value for a cash out, whether it's DSCR or full doc. So here, 10 1/8 has a little bit of a lender credit. You can buy that down to 9%. So that's a 70% loan to value cash out. That one was the credit reference option. This one is the no credit reference option. You're looking at 9.75 with about 1.5 points right there. And again, we do have par options and all the way down to 3 points. I picked the one right in the middle. Now, to throw a little bit of a twist, we do have below 1.0 DSCR options for the foreign national. Now, this is our best case option. This one goes 0.8 to 0.99, and this one is for a purchase, and our maximum there is 70% LTV because of the lower DSCR. But again, 10.25 has a lender credit. You can buy that down all the way down to 9%. And the one that we really love, this is the less than 0.75. No, I would like to point out this 0.8 to 0.99 option does not have any credit nor bank reference needed on that one. This one does have a credit reference, but it is below 0.75, maximum 65% LTV under DSCR purchase. pretty good rates there. We start at 10.75, but they have a nice broad rate sheet that we can actually buy all the way down to 8.875. So we got above 1.0 options on the DSCR, below 1.0 options, full deck options, options not requiring credit nor bank reference letters, and options that do require a credit reference letter.
I don't see any questions. It just sounds like you confused everybody there. But we got options is the theme, I guess, huh?
Yes. Well, I just want everybody to know foreign nationals are very easy to finance, right? I mean, it's basically if you go with the no credit reference and no bank reference letter, you need their bank statements to show the assets. And if it's a purchase, you need a contract
That's it.
and a passport just to show their ID. You don't even really need a visa on it if they're not signing here, and that's it. I mean, pretty easy. Now
So it's easier than a U.S. national.
Than a U.S. national going 30%? Absolutely.
And almost the same rates in
Yeah.
most cases.
Yes, sir.
All right, we do have a question from Nicole. Let's pull that up then. Do they need to claim rental income in the U.S. and their home country if they're a foreign national?
Well, they definitely need to claim it in the U.S., especially since most of them are going to have their properties held by an LLC. So there is going to be a tax return that's going to have to be filed. They will have their EIN for the LLC, and they'll probably have an ITIN for themselves so that they could file that 1040. But now, as far as their home country, that's a very broad question there because all of those countries have different requirements. Most of the foreign nationals like to keep their purchases over here private. So I don't know. You'd have to see how they want to handle their business.
I mean, I know Nicole's on our team, so we're not tax advisors or attorneys
Yes.
or accountants, so we only receive what the borrower provides. So just ask what they do and how they file their taxes is really their prerogative between them and their accountant. But yes, you will need X, Y, and Z letters. If you can't get X or Y, you'll need to go with option Z, as Jose explained, where you'll need less documentation. So just be careful there and just know what you have and what you don't have, because also you're not going to have get a new tax return in time to do a loan. So it's, you just need to know what you have, right? Looks like Nicole has another question here. What type of visa is needed for a foreign national DSCR?
Well, that's probably easier to answer with what type of visa is not acceptable, right? The one that's not acceptable would be a diplomatic visa, right? Like somebody working at a U.S. consulate or something like that, because they have diplomatic immunity, so they cannot be sued if they default on their payment. So that's the one that really is not allowed. Most of the other visas are acceptable if they're required to have a visa. But remember, all the European Union and Canada and a few other countries out there are not required to have any type of visa because they are, if they live in a visa waiver country. Now she asks, are they able to scale up more than 4 units after U.S. experience with 1 to 4 units? They can buy as many units as they want. The DSCR program for foreign nationals actually is less strict than it is on U.S. national borrowers. Right? It doesn't require them to have investment experience in the U.S. So that's pretty cool. They can, as many as they can afford. That's what they can buy.
I think maybe she's asking about a commercial 5-unit plus property, but yeah, there's no requirement. Anybody can buy anything, and we do have options to finance foreign nationals for 5 to 8 units or 9 to 100 units as well. But obviously, they're a little more strict on the LTVs. But there's no really experience necessarily requirement that's usually added to those. So. If that was the question. And then we got one more too. What about F1 visa students who have a Social Security? Can they purchase a home here?
Yeah, actually, I know Asma and I were discussing a prospect that she has that is exactly that. The F1 visa just allows the student to reside here as long as their student visa is active. Now, if they have a social security number because they may have obtained maybe some kind of an internship or something where they received the visa to work because it was a working internship at that point, if they transition to having the work visa, it all depends on how long that work visa is valid for. And then also they're needing US credit because once they have a social security number and a visa, now that puts them into a different realm of qualification where they will need US credit because you're almost going to be qualifying them then as a non-permanent resident alien.
Yeah, this is not a foreign national loan when you're going this route, basically. So that's not what we talked about today, but we do have some solutions, correct?
Yes.
Gotcha.
So that they would need credit at that point. They could still do the DSCR purchase. We still have options for that with no experience and first-time investors and first-time home buyers on a DSCR, but they will need to qualify based on the credit score and probably trade line requirements as well. That would probably be the challenge if their credit is 6 months to a year old.
All right, it looks like that is it here for the questions. So I think we can wrap it up. I think one of the main things to remember, foreign nationals do not live here and do not derive income from here, right, Jose? That's kind of the easiest way to think about it, right? Anything else is going to venture outside the foreign national box. Okay, so remember we do this show 11 a.m. Eastern every single weekday where we go through the live rates and do a deep dive into a different topic. So we will be right back here tomorrow with a new topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we hope to see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody.